Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So we're going to talk about Zillow's home forecast for 2024. This is for home prices. Now, this is not our forecast. This is Zillow's forecast. We're going to be doing these over the next few weeks. This is kind of the time of the year when everyone forecasts like what's going to happen next year. And we did one of these where we had like 15 different ones, and they were all over the place. And we had people saying home prices would be down 20% year over year and home prices would be up like 10%. And we ended up basically up, like we were down like 0.9%. It was like almost zero. It was even. So the minus 20% people were pretty far off. But the bottom line is it's pretty hard to predict home prices.
It is very hard. And remember, there are just so many different factors, and everybody's area is different. Real estate is hyper-local, so you can have one part of the country that's up 20% and one part of the country that's down 20%. It's kind of crazy. So bear with us. These are national numbers that we're going to go through. And so let's have a bit of fun with some charts and some good information.
We got a really good chart you're going to love. That's the whole country and color-coded, and you can see where you are on it. So here's the article. Zillow is so sure that U.S. home prices have bottomed that it just issued bullish calls for these 48 housing markets. Now, the 48 housing markets that we're going to show you here are, when we say bullish, we're talking like 7% plus appreciation.
Right.
Which is more than the normal. Normally we have like 4 to 5% appreciation, right?
Correct.
Okay. All right. So here's the first quote. In February, Zillow economists made a bold call that U.S. home prices had bottomed and would proceed to climb by 0.5% over the next 12 months. Now, Juana, Zillow called it in February, but we called it before that.
We did. We called it around January 20th, 21st, somewhere in there is what we noticed, the market turning. And I think we started talking about that about a week later.
Yeah, we actually, if we looked at the data, if you go back to our November, December videos, we said that the trend looked like it would probably bottom in January.
Right.
And then the 20th, we made a video saying it's bottomed and it's going to start going up. And we got laughed at by people. Everyone else figured it out like a couple months later.
Right.
Okay. All right. Here's the next quote from the article. In the months that have followed, U.S. home prices, as tracked by the Zillow Home Value Index, now this is an index, this is not median or anything, it's an index that they have stopped falling, and between February and June rose 4.8%. Wanda, that's like a whole year's worth of appreciation in a normal market.
It is. But just keep something in mind. And we'll talk about it in another video, but I want to bring something to people's attention. Right now, all of this appreciation is mostly because the inventory is so tight.
Okay.
I think we can all agree on that. I've got some ideas about inventory for next year, but I think I'm going to save that for another video. We're going to talk about our predictions.
Okay, so you're going to have to subscribe if you want to hear Juana's opinion of what's going to happen to real estate inventory.
And by the way, he doesn't know.
I don't know. No, she just surprised me with this information. Okay. The rebound coincided with Zillow repeatedly revising its home price forecast upward, just like the U.S. GDP revisions get upward. We're going to do a whole other video on that because U.S. GDP just came out and it was off the charts strong. Like the economy's growing like crazy. The economy is growing, accelerating. We'll talk about that in a second. So the latest revision is that home prices will increase 6.3% between June 2022 and 23. Now, this is a brand new article, but this is, I don't know if they got I think this is a typo. I think they mean next year. I think they mean June 23 and 24 because this article just came out. It's like brand new, okay? Above the 5.5% annual increase in national home prices have averaged since 1975. So that's pretty substantial to predict that. Because remember, that's a median or indexed median. So that means that you're going to have a bunch above that and a bunch below that.
Right. The thing to keep in mind is consider the source, right? With everything else, consider the source. Zillow is great at aggregating numbers, not necessarily at putting together a reasonable conclusion. And what I mean by that is, if you've ever been on Zillow and you looked up your house on Zillow and you're thinking, but my house is worth something completely different than this. Well, Zillow is kind of like that. They're great at grabbing numbers, but not so great at context. So when it comes to the value of your home, they don't know that your home is so much nicer than the other home that's sold, or that the other home that's sold is so much nicer and much more upgraded than your home. So they don't know those things. Zillow also doesn't necessarily keep in mind people's behavior. So that's kind of why you watch us, is because we look at the numbers and we give you context. So Zillow is notorious for being very bullish on real estate. Part of that is because of the way they crunch their numbers. Part of that is because it's in their interest, because they sell advertising and that sort of thing, so they keep wanting people to come to their site and that sort of thing. So kind of keep in mind that the source. It doesn't mean that Zillow is completely wrong, but I just want you to kind of take it with a grain of salt.
Notice she said completely wrong. They're not completely wrong. The A in Zillow stands for accuracy.
Moving on.
Okay. Well, Zillow, and this is the thing that shows that those numbers they meant 23 to 24. This is why. While Zillow economists expect national home prices to rise 6.3% over the coming months, their forecast model predicts that 48 of the nation's 200 largest housing markets will create increases of 7% or greater over the next 12 months. Okay, are you ready for the national chart for the next year, according to Zillow? Here it is. Okay, now, the areas that you don't see any that's sort of blank, that they probably don't have data on it, okay? Or they're extremely rural, you couldn't grab statistical data, not enough people there. This chart, there are only, it looks like 2 areas in the country. One is in southern New Mexico, and then one is in Louisiana. Everything else on the chart is green. Zillow is predicting every single market to be higher. What's cool is even Las Vegas is projected to be higher. The dark greens are like 7%. So you've got like Georgia's in there, parts of Utah, Arizona, a lot of California, surprisingly. California, member, got kind of hard hit. The Pacific Northwest, lots of the South and the East. This is pretty substantial. Juana, what do you think? I mean, like, this is a robust estimate.
It is. The thing to keep in mind, though, is that this estimate is, it's not that hard to guess at this. And the reason I say that is because when you're looking at this, you're looking at places that have a decent amount of population.
Okay.
So decent amount of population means new household formations. New household formations mean demand for housing. So it's more than what than what meets the eye. So because of these new household formations, because of this demand for housing, it's easy to sort of guess at this. The other thing to keep in mind is that there's so much pent-up demand already, right? Because people have been waiting either for interest rates to moderate, or for the right house to come along, or for some other economic thing to happen. And every day that people wait, more people queue up to wait. So it's this thing that kind of keeps feeding on itself. So the idea that home prices will increase in these markets is very reasonable, not necessarily based on economic factors, but based on human behavior.
The crashers probably hate this, and the doomers, because their 40-50% housing crash didn't happen. We're down 0.9% year over year. It looks like we're going to be up, maybe 6-7% next year in the U.S. Some markets will do better, of course, than that. And then something else is super interesting that, so this article came out, they did this thing with Grant Cardone, anyway. And they showed him like the top markets, like what the markets would be the best markets. And 2 of the markets were Seattle and Austin. And he said, I wouldn't touch those. I wouldn't invest anybody's money in those markets. Those are terrible markets. Well, they're terrible markets because they've had price declines in the last year. Mm-hmm. But this forecast is that they're going to go up. So here's my question. It doesn't take a genius to point at a market that's having consistent home price appreciation and say, that's a winning market. You're not some magic predictor. But to take a strong market like Austin or Seattle, Austin's got a massive Tesla gigafactory that's growing. It's got a ton of tech companies there. Seattle has Amazon, Microsoft, and a ton of tech companies and high-income people there. They've had some softness. Those are opportunities. The fact that somebody would take a market that's had, especially in real estate, where you've had 5 to 10% depreciation, Austin's got hit pretty hard over the last year, and then say, I wouldn't touch that market. I think that's just ignorance. It's like Jim Cramer. Anything moving on any stock taking off, he rants about how great it is. And any stock declining, he rants about how terrible it is, because he's just, people are just sort of wrapped up in that hype. And here's the other thing, Juana. The Fed just came, or they just came out with the economic numbers for the second quarter. Mm-hmm. The economy grew at 2.3%. That will get revised up. Okay, it will get revised up. We are done with the chance of a recession. Now that we've had a 2% quarter and a 2.3% quarter in a row, is almost zero. Like, there's almost no chance we'll actually get into a recession. Even Jerome Powell said, hey, we've raised rates and it hasn't slowed down the economy. And it just shows how strong the economy is. And the likelihood of a recession in 2023 is zero. Jerome Powell said it's zero. It's not going to happen this year. No recession 2023. Not going to happen.
Okay.
Which is what we said a year ago.
Right.
Right?
Right. So, I want to piggyback a little bit what we said about Cardone and Kramer. Look, what do we all know? Buy low, sell high. So these guys are saying, okay, these markets are down, so don't buy. How does that make any sense? So just paying attention to what they're saying and using your own common sense makes a lot more sense than doing what you're told. Just listen to the information, figure out what actually makes sense, and then behave accordingly. And that's why, I'm kind of talking a lot about behavior in this video, but that's a lot of what I'm seeing in the market. Is I'm not seeing things that have economic fundamentals, more of what human behavior is about rather than economic fundamentals. A lot of times it is economic fundamentals, but not this time around.
The only negative thing in housing right now, the only one thing, is affordability, or this idea that some people, like your average person, can't afford to get a 100% loan and then get a 6.8% rate, yada, yada, yada. But those people aren't buying because, of the 37 or so million people that say they want to go buy a house in the next 12 months, only 3 to 4 million will do it. So who's going to win? All those people going, home prices are too much. They're too much for you. But when you're making offers on $3 million houses and somebody else is coming in with cash, there's plenty of money out there to buy real estate. And then the other thing too is wages are up, like real wages are up 4.4%. Mm-hmm. Real wages, not nominal wages, real wages up. People are making more money. Unemployment's the lowest it's ever been. The foreclosure's the lowest it's ever been. The gap between the number of households being formed and the number of households being built is the largest it's ever been and growing. Like, every single metric points to home prices appreciating. And what this means is real estate is a great investment. And it's just amazing how many people over the last, the crashers have been saying since 2019. Think about all the people since 2019 sitting there at night watching housing crash videos going, man, I'm so glad I canceled escrow on that house in 2019 because, the market would have crashed and I just wait till the home was worth half the price and I'll go buy it then. And now the price is 50% more. Like, no, but it's still going to crash. And then they'll be like, 2040 going, in their nursing home, I'm waiting for the housing crash to happen. It's not going to happen, guys. There's no housing crash. We had one. It's probably the last one in our lifetime.
Well, I don't know that it's the last one in our lifetime, but I don't see one on the horizon.
Crash?
I don't.
Yeah.
I can't speak to that.
Yeah.
But what I can speak to is that, we do want to make sure that everybody understands that this is more about human behavior right now than about anything else.
Yep.
Okay.
Okay.
Anything else?
Nope.
All right. Perfect. If you like the video, please subscribe, hit the notification bell, like the video, share the video, leave us comments, tell us what you think, and we'll see you on the next video. Bye.
Bye.